Okay, people, what if we compared QQQI to QQQ over a 20-year period? Which one is going to perform better? Let's just jump right into it and check out which performs better after running some simulations. All right, people, we are here in the market beat dividend calculator, and this is going to help us forecast what a 20-year lookout looks like for QQQI as compared to its underlying asset of QQQ. Okay, so here's the assumptions that we put together. Okay, so first you set up your QQQI ticker. You set up your distribution of free to monthly because it's a monthly distribution. The key factor here is adding DRIP, yes to DRIP, dividend reinvestment plan. We want to ensure that every time you get a distribution in this case, it's going to reinvest those dividends right back into the fund. We have 4,000 shares, which is right around 250K. This is the share price. We're just going with a 15% flat dividend tax rate. I know that QQQI does have a unique tax structure, but for this case, we want to keep it simple. The annual dividend yield, I've dropped it down just a bit to 13.75 to account for the the larger MER here as compared to QQQ. And the MER is the management expense ratio, about 0.68. We're expecting about a 3% annual price appreciation. Might be a little less, might be a little more, but with this, because it's a covered call solution, you're not going to get that much price appreciation, and the dividend percentage should mimic the price appreciation in this case, because the dividend will hold the same value over time, I believe. All right, and so we're gonna invest this for 20 years. Okay, so we're gonna calculate. And at the end of it all, you will see $3.8 million in total ending balance, 3.8 million over 20 years. And this is simply by putting in 250K and letting it ride. Okay. You're not going to add in any new contribution, no new contributions, literally just putting in 250K, sitting for 20 years, enjoying your life, going, doing your thing, and letting it sit. This could sit in a 401k or eventually in a Roth IRA. So just 250K over 20 years will net us 3.8 million if all these things hold true. Okay, total return 1600, annual return 15%, assuming that all these things hold true. Okay. The annual dividend income at the end of it after 20 years, so you're looking at 500 to 600K in annual dividend income. Okay. This is phenomenal. Looking at the chart here, there's a lot to look at here, but ultimately, the first year you're going to see 31K in dividends. And again, that's going to drip. So we're not going to be using those dividends to live on. We're going to be reinvesting those dividends into the portfolio to continue that flywheel effect, to continue the compounding effect, right? And at the end of it all, as I said, $484,000 in annual dividends near the end of it all. So really, really strong dividend payout. And you can see this is dividend payouts to live on, right? At this point, you're going to be living on this. So as I said, $3.8 million at the end of it all after 20 years. So let's look at QQQ now. Let's compare that to QQQ. Okay, we've set up a similar structure, 250K about in a volume of shares. We're going to also be on DRIP. In this case, there's not much of a dividend yield at all when it comes to QQQ. It's 0.49%. And that dividend increase, I put at 2% a year. Now that we could have changed that assumption a bit, but right now we're going to leave it as is. And then again, we're going to expect, in this case, price appreciation as opposed to dividend yield. Because with QQQ, it's a price appreciation play. It's a growth play as opposed to a dividend yield per year. Set it up for 20 years, 15% tax rate, no annual contribution. And what do we get in the end of it all? $3.2 million after 20 years. Wow. Okay. And remember, QQQI gave us 3.8 million. Oh, wow. So you're telling me that QQQI overall in the end of it all is stronger than QQQ. Well, that's what this formula says. Now, QQQI is much newer to the market. It is a newer asset. It is a little more, I would say, riskier than the underlying asset just by the nature of covered calls, in a sense, because this is simply owning the underlying asset in general is a more fundamentally sound strategy. But again, like looking at these things, looking at this analysis, if all things hold true, QQQI actually does net you the 3.8 million, 600K more than if you were to go with QQQ and ride with that. Plus, it's an interesting strategy because at the end of it, certainly you have a great ending balance, but your dividends now at the end of it are only going to pay you out. Um, what's the annual dividend look like at the end? Nothing. Like 1,000 still, like you're really not earning a dividend even on such strong value here. Whereas with QQQI, you're going to be earning a healthy dividend, and you can just live off of that and not really sell the balance, right? Like not really sell any actual value there. You could just live off the dividends. We look over here, we can live off these type of dividends. I mean, that massive dividend, massive dividend. So it's an interesting thought process here and an interesting analysis to look at, what happens with QQQI versus QQQ. And that's all about the dividend yield. This dividend yield unlocks the opportunity to have such compounding dividend growth over time, and dividend yield, income over time. Whereas again, like with QQQ, you're getting the appreciation, but it seems that with QQQI, you kind of get the best of both worlds. You're going to overall get that appreciation, with the compounding effect plus the net income at the end of the day. So it's an interesting analysis to consider. Of course, QQQ rather, in my opinion, is a little more safe. You're buying the underlying assets. You're not playing games with covered calls. But so far, so good on QQQI. And again, I love what they're doing. And so, yeah, this is the analysis that I think is really intriguing and something to consider when building out your portfolios. I kind of recommend having a mixture of both QQQ and QQQI in your portfolio for different reasons. QQQI for the income, and then QQQ, of course, for the price appreciation. Okay, guys, what do you think about QQQ versus QQQI? Which one are you invested in? And I have started a Patreon. If you want one-to-one financial coaching every month, I can offer financial coaching for the Patreon. It's a very, very affordable cost for this Patreon, and I'm dedicating a lot of time and effort to it and to you. So if you want to check out the link below for the Patreon. Outside that, if you've watched this full video, type in the word down below, cash. Just put in cash so I know you watched the video. Outside of that, guys, all the best. See you tomorrow. Cheers.